In this lesson, we will have a look at accruals and prepayments ledgers. Now, the specific objectives for this lesson is to prepare the general journal entries for adjustments and post to the general ledger, and to bring down the adjusted amounts as balances as at the beginning of the next financial period. Now, the adjustments we are referring to is accrued income, prepaid expenses, income received in advance, and accrued expenses. Now, the information below was extracted from the books of Adelaide traders for the year ended 31 December 2018. Let's have a look at the pre-adjustment trial balance for Adelaide traders as at 31 December 2018. Now, the adjustments are as follows: telephone account in arrears $470, monthly insurance premium is $650, insurance is paid until March 2019, yearly interest on fixed deposit accrued, and rent had been received for 14 months. What's required is to prepare the general journal entries for the above adjustments and to post the entries in the general journal to the general ledger and bring down the adjusted amounts as at 1 January 2019. Now, what do we need to do? First, we need to identify the two accounts. This we do by looking at our keywords and then also determining if we received or paid more or less than the 12 months. Once we have done that, then we need to take the adjusted amount, that is the amount outstanding or the amount paid or received extra, and then post that amount in the general journal. Let's have a look at our first adjustment, and we are only gonna do the calculations in this part. The postings will be in another video. On our first adjustment, it reads telephone account in arrears $470. So in this adjustment, the amount is already given, so we don't need to do any further calculations. Let's move on to the next adjustment. Monthly insurance premium is $650. Insurance is paid until March 2019. For this adjustment, the amount per month is given. So that means we need to calculate for January, February, and March. Why? Because our year ended on December. So what we need to do is take 360 multiplied by the 3 months to get 1950, and this is the amount we will record in our general journal. Let's move on to our next adjustment. Yearly interest on fixed deposit accrued. For this adjustment, no amount is given, so we need to work on our 8% interest that we have on our fixed deposit. So to calculate this, we will take our 28,000, which we get in our trial balance, multiplied by the 8%, which we also get in our trial balance, and that will give us $2,240, and this is the amount we will post in the general journal. Our last adjustment reads as follows: rent had been received for 14 months. Remember, a financial period has 12 months, so we received rent for 2 months extra. In this adjustment, no amount is given, so we need to get the amount per month. And how do we do that? We take the amount received divided by the months received, and we received $23,100, which we will find in our trial balance, and we received that for 14 months, and we find that in our adjustments. So 23,000 divided by 14 will give us 1,650, and since we received it for 2 months extra, we need to multiply that with 2 in order to get $3,300, and this is the amount we will record in our general journal.